Well, Satoshi Nakamoto said, if you don't believe it or you don't get it, I don't have time to convince you, sorry. Fortunately, these two guys have spent a decade educating and informing people about Bitcoin, and that's what we're gonna do today. I'm just gonna give very brief introductions. Wences is affectionately nicknamed Patient Zero for having introduced Silicon Valley to Bitcoin. So every sort of celebrity Silicon Valley billionaire that you know has publicly, in most cases, credited Wences. Pete, as most of you know, is one of the great distressed investors in the world. And I'll just tell a personal story. Pete was my Sherpa into Bitcoin. And I found it incongruous that Pete, who, I think of someone, margin of safety, attachment points, was, so invested and so bullish on Bitcoin. And so now the three of us, to various degrees, are irresponsibly long, and that will lead me to my first question, which I'd like both of you to answer. You've been in Bitcoin for a long time. It's been good for you. Any private banker would tell you that you own too much, and yet both of you in the last year, I'm going to share a secret, have bought more Bitcoin. So Wences, you go first, and tell us why here in 2021, with Bitcoin up from 10,000 to 45,000. Capital gains rates about to go up, not a bad time to sell. We're buying and not selling more Bitcoin.
I think that I am more likely to make the opposite mistake, to think it's expensive when it's actually still cheap, because I've been in it for a while and because it's all I do all day. When you look at the trajectory of tech companies, the same thing happens, that the people who were involved with them early sell too early. For some reason, it's harder. We anchor in. It's harder to see the full potential, right? So if you see the insiders who own Amazon at the IPO, how many of them hold today? It's almost, other than the founder and a few other people, most of the insiders sold, and some outsiders saw the potential better than some insiders. So I think I have more risk of the opposite. And when I look around at what I can do with my money, I see a lot of things where I'm not an expert that seem expensive, where it's equities or bonds or real estate all over the world. And the one thing that I do that every day, day in and day out, seems cheap to me. So why should I diversify into things that seem very expensive if the one thing I understand seems cheap to me?
But before we go to Pete, can you just expound on cheap? So how are you thinking about?
I think that there's going to be more upside in percentage terms over the next 5 and 10 years than we've seen in the last 5 and 10 years. So people anchor and they look back and say, oh my God, I missed that train. No one has missed that train. Most people will wish they bought Bitcoin under $500,000. But people look back and said, oh, I missed it. No, we haven't missed it. What it's going to do over the next 5 and 10 years is more impressive, not in absolute terms, but in percentage terms, than what it did in the past. Or it's not going to work, but it's not going to be mediocre either way.
Right. Pete?
Well, the reason why I bought more Bitcoin in the last 12 months, and I have been an owner for the last 10 plus years, is the resiliency that I've seen in Bitcoin and what I see going on in the world of cryptocurrency. So on the one hand, you've seen 30,000 competitors to Bitcoin spring up, get rich quick schemes, ill-fated commercial propositions, what have you. And so investors have to choose between something that I think is beautiful, the proof of work algorithm that allows the validation of the system, which creates the security, which creates decentralization, which creates the ability to hold and move money without the need for a centralized institution. That's a beautiful concept for me. If you've seen what's going on in the world of Bitcoin over the last 12 months, you've had China come in and outlaw Bitcoin mining for the most part in their country. You've seen these 30,000 competitors draw attention away from what's going on in Bitcoin, and you still see the adoption. And I think what I get to see being primarily an East Coaster with East Coast roots, having moved out to the West Coast about 12 years ago, is both sides of it. The adoption, the amount of money and time and attention that's going on in the infrastructure associated with cryptocurrencies, as well as the adoption that's taking place in the East Coast with who is adopting it and who is using it and who is selling it.
So you've used the word cryptocurrencies a couple times, and the word Bitcoin is up there in big letters. So I want to ask you, when I think of you as a great risk manager, but you're all in on Bitcoin rather than spreading your risk across more coins. Can you sort of speak to that decision?
Well, it goes back to this issue of security and sovereignty for me, which is what I thought was brilliant when I first came upon Bitcoin was the fact that it had the opportunity to take the margins out of the banking oligopoly. I, as a financial services garbage collector, as a distressed debt investor, had always been worried that you had so much innovation in the world, and yet the banking industry had failed to deliver on its promise of lower costs. You still have a cost of sales when you're buying something. The merchant gets 97 cents on the dollar or 98.5 cents on the dollar. And we have smartphones, and we have the ability to have everybody bank at much lower costs, yet interchange and payments still cost pretty much what they did 20 or 25 years ago. So that oligopoly has not let costs come down. So for me, the idea was truly brilliant. Why I don't think, about investing in the other coins is, from my perspective, Bitcoin is the only truly decentralized system, and the only system that therefore allows us to truly have trust in the storage and movement of money.
I want to ask a related question, which is Ethereum and Solana are sort of the flavors of the month. How do we know Bitcoin isn't MySpace?
I think that I am fascinated with what's going on with sort of better versions of Ethereum. With Ethereum itself, there's a lot more going on top of Ethereum than there is on top of Bitcoins, and that's interesting, and we are all learning, and a lot of the things that are happening there are here to stay and are going to change the world. And then you see better protocols to do that, like Solana and Polkadot and Cardano, and I think it's all fascinating. And then you go a step further and see what's going on in DeFi, particularly in decentralized exchanges and the lending and borrowing protocols. I think all of that is an incredible innovation that was unthinkable a few years ago, and it's here to stay, and it's likely to change the world. But the fact that a technology is good and it has potential doesn't mean that it's a good investment. The way I think about Bitcoin is that it has a 10 to 15% chance of going to zero, failing and going to zero. But in my opinion, it has a higher than 60% chance of being successful and being worth more than $1 million in the next 10 years. More than $1 million per Bitcoin. And that's very asymmetric. And all I have to do is keep doing what I've been doing, which is buy and hold. Whereas when I look at other super interesting coins that are innovative and technologically just fascinating, I see opportunities in which one could do 100 times your money and 300 times your money. But I also see that there's 1 in 100 chances of making that, and that you would have to know when to buy, you would have to know when to sell, and that's not a game that I know how to play or that I can play. So that's why I'm fascinated with all of crypto. I'm bullish on all of crypto, but I am very long Bitcoin, and in the rest I'm just learning and experimenting.
And Brett, can I just...
No, please.
So I really think of those 30,000 competitors, Ethereum and Solana are two of the most notable and probably most of the most real of the 30,000 competitors. 99.876542% of those are going to go away. They're going to go to zero. So if you think about what's going to happen in the world of cryptocurrencies, I think it's going to be Bitcoin and maybe several others performing different use cases. But that's a dramatic transition that's going to go on. A lot like what happened with China outlawing Bitcoin is, if you think about, sort of the survival of Bitcoin throughout the mining shutdown in China, and you think about the distraction of 30,000 competitors, 99.85% of which are going to go to zero, that's amazing. So you can sit up on this stage and you can make the comment that you think that the crypto industry is going to go to zero, and you're going to be 99.85% right in terms of the number of these failed schemes that are not going to exist. And so you have to look past that sort of transition to actually want to own Bitcoin for the next 5 or 10 years. And what I see as so positive in the last 12 months is the fact that Bitcoin is still held up. It's still up 60% on the year. So imagine what happened if you didn't have all these people who were focused on get-rich-quick schemes, or you didn't have sort of China attacking Bitcoin. It has amazing resiliency, and that resiliency comes back to the decentralization of the validation, the 150 million people that now own Bitcoin, and the fact that it's very hard to kill.
And when you say is Bitcoin or Ethereum, MySpace, and is Solana or something else, Facebook, in my opinion, you're making a mistake that has cost billions of dollars to Silicon Valley and to Wall Street. And what I mean by that is that we are analyzing protocols, not companies. And most investors in Silicon Valley and most investors in Wall Street are very used. They got sharp at what they do by identifying company patterns. The company patterns, like MySpace and Facebook, are completely different than protocol patterns. Protocols don't have a board, don't have capital, don't have a hierarchy. And so if you look at any protocol, whether it's the TCP/IP protocol, which is the internet, or the HTTP that we use for the web, or SMTP that we use for email, or Wi-Fi protocol, the way they got established and how long they lasted, it's completely different than what happens with companies. So the intuitions that may help you a lot to analyze a company or companies in general will betray you when you're analyzing a protocol. And from the point of view of the development of a protocol, Bitcoin is looking incredibly robust. And I would say so does Ethereum. But if you look at them as companies, you may see all these weaknesses that, in my opinion, are not there if you think of what they are, which is protocols.
So, Wences, just to be clear, I didn't make that mistake. I asked that question for them. I only own Bitcoin. So, at the MicroStrategy conference in February, when Michael Saylor was speaking to Ross Stevens said something that really clicked for me. He said that because of the resilience you've spoken of, Pete, that the left tail has been removed from Bitcoin. But Wences, you just said, I don't think he meant that there's zero left tail, but I think he's right, means that it's substantially diminished. So you said that there's a 10 to 15% chance that Bitcoin doesn't succeed.
Yeah.
So what do you worry about? Like, if we're wrong, why are we wrong?
First of all, I think we have to be careful becoming arrogant, and arrogant make us blind. I think it'd be, I would never say that the left tail has been eliminated. An easy way in which this goes to zero is a technical bug, right? And even though this is being audited 24/7 for 8 years by some of the most intelligent people on the planet, it is a creation of humans, and we humans are fallible. So that is always there. Mm-hmm. And so that, to begin with, I would say that. I don't know, you can make up cases. I imagine the most important component of that 10 to 15% are black swans that I cannot imagine. So by definition, I cannot tell you what they are, because it's things I cannot I cannot imagine, but I don't know. Imagine something where we a much better protocol with some intelligent way to getting established, distributed to hundreds of millions of people really quickly, or quantum computing evolving much faster than we thought, or the number of things that could happen that could make it fail. I am more concerned with not that 10 to 15%, but with around 20 to 30% chance that it doesn't fail, but it becomes irrelevant. I think that's more likely than failing. And irrelevant for us, for our generation. You can think of the BitTorrent protocol. It's a great protocol to move data in a distributed fashion. When it came up, many of us thought it was going to change file sharing, it was going to change music, it was going to change video. And it didn't do any of those things. File sharing was changed by the Dropboxes of the world, music by the Spotifys of the world, video by the Netflixes of the world. And the BitTorrent protocol didn't fail. It's there, but nobody cares. It's irrelevant. And Bitcoin has the same risk that could happen to it. Or it could happen, for example, with a very coordinated very well coordinated government action against it. We could make it where it doesn't disappear, but it's not very relevant in our lifetime. So from my point of view, it's as if it failed.
How about you, Pete? What do you worry about?
Oh, I think the big question mark for Bitcoin is how the banking system is going to attack it. The banking system has the most to lose in that currently it stores most of the value today and it manages payments. And so I think if you come up against the banking system as a competitor, they're going to try whatever they can through lobbying efforts, through scare tactics, through litigation, to slow that industry down. And they do that, sort of in constant communication and education of the regulators. The thing that I'm most optimistic about in the United States is I think we've got the best regulator in position right now that maybe we've ever had. One of my ex-partners, Gary Gensler at the SEC, taught a Bitcoin course at MIT. I think that people think that he might be anti-cryptocurrencies. I actually think he's really positive on financial services innovation, but that it has to be done in a framework that makes sense. But I don't think he is in any way beholden to the banking system. And so I think what is potentially the biggest risk to Bitcoin and the positives that it brings to the universe in terms of equality and being able to participate in the financial system. I think that for the first time we're seeing green shoots there. So the biggest issue is regulation and how the banking system will attack a competitor. My personal view is you only have to look insofar. We've got 2,000 people here, and I bet you we can't come up with 5 really serious innovations in the banking industry over the last 50 years. Maybe I start with credit cards, ATMs, and after that, it's really very thin. And the reason is because they've got an oligopoly. It's a regulated oligopoly. It's supported by the government. Banks are given deposit insurance. So as interest rates go up, they become more profitable because they can take in money at much lower costs and have that government guarantee. And so they've gotten lazy. Most of the sort of technology that's used by banks today is not developed at banks. It's developed by other service providers. And so, I think that they've gotten lazy, but what they are really excellent against is defending their products, defending their margins, and using the regulatory infrastructure to defend, their ability to compete better than any other legacy industry in the history of the world. And so for me, you need a tough-minded regulator like Gary in there to be able to navigate the waters and to sort of separate the wheat from the chaff. But I would say, sort of regulation, and then this whole issue of 30,000 competitors that are likely to go out of business. That's a big thing for a regulator to deal with, because that there's going to be a lot of economic loss and that there are going to be investors that lose money. Mm-hmm. They may not lose money with respect to Bitcoin and that ecosystem, or maybe even Ethereum or Solana and those ecosystems. Those may be good. That being said, that 99% of the industry is going out of business. And so that's something that is a really dramatic, sort of industry tidal wave that you've got to deal with.
So I think Wences is being polite. He's on the board of PayPal. So can we count PayPal as an innovation? We'll just add that to Visa and the ATM. I'm just joking.
No.
Sorry.
I am no longer
going to start to have to use it and develop work for Barbados's purposes. And so I thought, well, I wonder when that's going to happen. And he said, I just don't see it happening. So when it happened in El Salvador a lot sooner than I thought it would happen, I was happy. And I think you're going to see in all of these sort of maturation processes of Bitcoin and the whole cryptocurrency environment, there's going to be a lot of volatility. There's going to be a lot of trial and error. And out of that is going to, arise real financial services innovation. And so, what may be really hard to get done in the United States might be a lot easier to get done in a place like El Salvador. You're talking about, sort of a smaller pool of people. It may be less complex in terms of what they're trying to accomplish. And then those learnings will become universal. So I think it's a positive. I really do think it's a positive. And I think that it's going to happen in other places much more quickly than people think.
You want to opine on that?
I'm excited about it, but I don't know enough to tell you something more useful than that, what Pete said.
Shifting gears a little bit, Peter Thiel in an interview a couple months ago described Bitcoin as the most stupidly obvious trade in the world. And he compared it to the FANGs in 2014-15. And he said it's so obvious that institutional investors are going to miss it. And, we run a fund of fund, and, we're fortunate enough to allocate money to some of the greatest investors in the world. And they do seem, at least right now, reasonably content to not participate. I'll start with you, Pete. Why do you think that is? And what changes that?
Well, as I say, that there's a right brain, left brain aspect of Bitcoin out there. I think there's a West Coast, East Coast. There's a tech finance aspect of Bitcoin that you sort of have to put both parts together to really get excited about. And I think Peter, having been a macro trader and having been one of the world's most significant tech entrepreneurs and one of their most significant venture capitalists, has noticed that, and it's clear to him. Me, having grown up on the East Coast and having moved out to the West Coast to live in Silicon Valley 12 years ago, and happening to have a brother-in-law who's one of the best tech investors in the world educating me, Wences educating me, it's been easy to see. Where I think it becomes harder, again, is Bitcoin went from 0 to $1 trillion market cap in the course of 10 to 12 years. And today, I could buy on my smartphone Bitcoin from 5 different places inside 1 minute if I had to do it. And I think probably most of the 2,000 people in this room might bet against me in my ability to buy Bitcoin on my smartphone from 5 different places in a minute. So I can buy that, and I don't have a management fee. I don't have a promote associated with that. I just buy it from Square or PayPal or Venmo or what have you on my smartphone. and I can hold it for free or at a very low cost. So the opportunity for, sort of the sales machine that is Wall Street to profit off of that is less than all of the other 30,000 competitors out there, where you can invest in hedge funds, or you can invest in private equity funds, or you can invest in other things where the alignment of interest of the manager is earning, 1% or 2% management fee and a 20% promote. And that, sort of has kicked up this incredible machine of creating, these 30,000 competitors who are all looking for, sort of the riches that, were there in Bitcoin. And so from my perspective, a lot of that has to play out. It really has to play out. And it's going to be a dramatic, sort of environment for the next 10 years. I think, for the rest of this conference, you're going to have a lot of people coming up and they're going to be talking about all of the shiny objects that are being created in the world of cryptocurrency. And as Wences said, some of them are going to be the real financial services innovations of tomorrow, but those are going to be, sort of very far and few in between. And yet the purveyors of those investments are the, sort of the equivalents of the picks and shovel purveyors of the gold rush. And so, from my perspective, when I look at this, I say, Bitcoin, and then you pick it, 2, 3, or 4 other protocols might become significant. And then the question is, of those protocols, which ones are going to truly have value capture and relevance as an investment? Because you might be able to be used as a database, but it's not clear that that database is actually going to be, a revenue generator. So from my perspective, sort of this whole thing, figuring out this whole thing and trying to make sense of it is an order of magnitude higher, because you've got so many salespeople involved in it, and you've now got, sort of this proliferation of competitors, and that 30,000 competitors today isn't slowing down. It might be speeding up.
I think that if we make an analogy with the web, with the internet, we are in 1994 or 1998, where you had very rudimentary, brand new browsers. You had to use your phone line to call the service provider. That was a very slow connection. Sometimes it dropped, and when you wanted to download a picture, you saw it downloading slowly. And back then, to imagine that you were going to be using the same network to do high definition video calls all over the world for free seemed science fiction. It happened, but we had to wait 3 decades. And I think that's where we are today in Bitcoin. And that's why you can buy it for $50,000 instead of $5 million. Of course, a lot of these investors will have to wait until this is all much further along to buy it, but it will also be a different price.
Well, I think we're about out of time here. So thank you very much. This has been great. As Pete mentioned, everyone can buy Bitcoin on their phone. So, if you're feeling it, let's buy some Bitcoin, and have a great conference, everybody.